Good afternoon, welcome to Medellin and the weekly rundown from InterBolsa for September the 11th. The coal cap this week has been edging up, basically pushed by the region. It's up 1.8%. Volume has been modest, not too many newsworthy events to push the market, but going in the right direction. The peso has been trading around the 2,000 level a week. It's going to close at 1993. It's been helped this week by a couple of research reports from overseas, both indicating they expect the peso to get to be closer to 1,800 than 2,000 by the end of the year. The test market probably had the major news on this side. The Isahen sale by the government has been delayed by a couple of months, which is going to force the government to issue around $1 billion in extra test bonds this year in order to cover the financing for this year. That, one would have expected the yield to move a long way up, but it's only moved up around 20 basis points and really only 10 basis points since the news broke. The market's been trading fairly flat of late, and I think traders were fairly suspicious the government were going to sell more test bonds in terms of pre-funding anyway, so we're not seeing a massive reaction in the market. In terms of macro data, we had the import data for July. Imports were down 7.8%. Which led to a trade deficit of $131 million, but we are still in surplus for $562 million year to date, and that's about $562 million more than most analysts were expecting this year, so good news. Obviously, we're still criminally overexposed to Venezuela in terms of trade balance. That's something the government will have to work on going forward. One kind of footnote, we probably wouldn't have run a deficit for the month, but there were some big aerospace purchases from France and Israel, which kind of propped up the imports somewhat. We had CPI data over the last weekend, 0.04% for August. That's exactly what InterBolsa was expecting. We're now at 3.13% on a 12-month basis. Everything's going in the right direction, and we already had the Agriculture Minister pointing to lower food prices for the rest of the year. And we may have more news on that. Uribe sat down with Finalco, he sat down with the main supermarket chains earlier in the week, and they're going to make a concerted effort to drive down prices on staple goods, starting with meat. A lot of this will be helped actually by Venezuela. With exports drying up to Venezuela, there'll be a lot more food here in Colombia, and that again will help CPI. Other news, we had a Gallup poll out yesterday. Uribe is running more popular than ever. He's at 70% approval rate. 64% of them say they approve Uribe running again in 2010, and an awful lot of them say they'll turn out and vote in the referendum. Looking at the numbers, it looks like he'll get comfortably the 7.5 million that he needs to stand in 2010, and once he stands, it's really a slam dunk from there that he would stand again. That's, again, still on the premise that he does want to run, which is still not 100% clear. Within the Gallup poll, we also saw those polled indicating they were happier about the economy. Obviously desperately unhappy with Chavez, but it was all pretty good stuff for Uribe. Aside from that, on the political front, it's been very quiet. Chavez is making minimum noise. He's cancelled 16 cargo flights a week that go from Colombia to Venezuela. The passenger airlines also say he's playing up a little bit. There's more delays and cancellations than usual, but generally he's been fairly quiet. He's been asking for the government here to speak to the FARC and try and negotiate some kind of truce. I think if there's one person the government here is not going to listen to, it's Hugo Chavez at this point. On the stock front, the big news is we downgraded Fabricato from a buy all the way down to a sell. We just, at this point, cannot see good news for Fabricato. They have problems with Venezuela, and Ecuador as well, in fact. They have problems with the peso. They have problems with the collective bargaining agreement they have. We still have continued problems here with smuggled goods coming into the country. So Fabricato right now in a bit of a mess. So we're downgrading them for now. We're just waiting to see what transpires with those guys. Isahen, as mentioned earlier, the sale has been delayed from October until December. It's no biggie really. It's a couple of months, but obviously it has forced the extra sale of test bonds. The reason for the delay, you could pick all manner of reasons. There's every rumor and every piece of speculation, and really no one knows the truth deep down, and maybe we'll never know. On other stock news, the BBC announced that they're looking at, they've signed a deal to look at some kind of joint venture with the Chilean and Peruvian stock exchanges. That's probably a fairly long-term project, but just be aware that that's going on. Finally, Spencer Argos gave a brief update on their Cartagena plant, which will come online for December and will be fully functional by July. It's over budget and it's late, but it's nothing new here in Colombia, and in the longer term picture it's going to be a very profitable and very successful venture for them, I'm sure. Finally, before we go into the weekend, obviously being September the 11th, very significant and poignant day for many people, and everyone's got their stories, and just this is just to say, for all those people out there, obviously tough times, condolences to everyone who lost somebody or friends at the time. But life obviously goes on, and with that poignant note, I'll bid you all a very good weekend.